It's been a difficult year for gold investors, certainly for the metal itself, but clearly there are many ways to play the precious metals markets generally, including bullion, gold coins, ETFs, and shares in prospective and productive companies. As I said, it's not just gold, but also silver. One long-term investor in this market is Angelos Damaskos. He's the fund manager of the Junior Gold Fund, soon to be called the Junior Gold and Silver Miners Fund. Angelos, welcome.
Thank you, Jeremy.
Just wanted to take an overview, first of all, of the precious metals markets. We're going to be talking mostly about gold, I know, but because that's what a lot of people discuss. But I think silver is also worth discussing because it does have precious metals qualities. And as I say, you're changing your fund to include silver as a large part of the portfolio anyway. But let's get your thoughts first of all. As I said at the top, it's been a bit of a lackluster year, and I don't think anybody's going to argue with that. Why? And is this going to persist?
Well, it's been a difficult year from the perception of looking at the discrete period of 1 year, I think. If we go back a little bit further to 2 or 3 years, we can see that gold has had a very strong run, at least since 2018. And it is now really consolidating for the last year. And in my mind, the explanation for this consolidation is that it almost coincides with the vaccination effort being successful in reopening the economies and investors getting drawn into the recovery sectors in the stock market and in general in investments. So they sort of investors seem to have left gold on one side for the time being and concentrated on the productive sectors of the economy. And it is yet to be decided what will be the next course of action. How will gold play a part in investors' portfolios as we see rapid inflation persisting, interest rates being kept very low by central bankers because they can't increase for fear of damaging the economy? And the big black swan event is if we see economic growth lagging inflation when we have potentially stagflation. And I think that would be the scenario when gold really takes off because it provides safe haven aspect and preservation of value.
The only other thing I'd say to that is that this environment would then drive the dollar up, which means then if, of course, you've got a dollar risk when buying gold, that tends to push the price of gold in dollars down. Mm-hmm. So you've got this inverse relationship, didn't you? So if that persists, as indeed we've seen recently, the attractiveness of the dollar, it has put a lid on any gains in gold, hasn't it? Do you not see that as a force against the gold price?
I don't necessarily see the correlation of the dollar being the dominant driver of gold prices. Okay. For example, during the pandemic, we saw a massive decoupling of this correlation between gold and US dollar. And we have seen it again now correlate in the last year or so, which we said is clearly dependent on the economic recovery. So I think what is the likely driver of gold prices and silver for that matter going forward is this massive macroeconomic imbalance we are facing. We have huge indebtedness around the world. There are no ways to address this indebtedness other than printing more money. And currencies across the board are losing value, are being debased. It's not only the US dollar. You have the euro, the yen, the sterling. Everything is losing purchasing power, and not only because of inflation. So I think as investors start focusing on wealth preservation and securing some value of their portfolios, they are likely to look back into safe havens like gold and silver as cornerstone investments.
Okay, you brought the subject of silver in. Let's go back to the charts if we can, and we'll take a look in detail at silver in just a minute, just to remind ourselves as to where we are on spot gold. This red dotted line here is $2,000, the $2,000 level, which it did pass, of course, gold back in July last year, racing to that record high that we had. Let's just bear that in mind, that the shape of that chart. This is silver over the same period. Silver currently trading at $23.78. That's $23.78 the ounce. How do you see the relationship between gold and silver going? First of all, is there a relationship? Because I know that the markets quite often focus in on the gold to silver ratio, which I think is just around below 80, I think, at the moment. Yes. What that means, maybe I can invite you to talk a little bit about that to work out just what the relationship is between gold and silver. I mean, clearly there is some sort of relationship in as much as they're both precious metals, but they don't always move in tandem.
Well, historically, there is a fairly close relationship if you look over 10 or 20 years between gold and silver prices. The fact remains that silver has been much more volatile than gold. So it tends to outperform when markets are bullish about precious metals and people are buying safe haven assets, and tends to underperform when the market switches off. What is interesting at the moment is that in the last year or so, silver has actually kept its value much better than gold. I believe there is an element there of the industrial demand and its appeal as a superior electric conductor that is driving this sort of decoupling of a historical correlation and maintaining the silver prices slightly higher than, in relative terms over the last year. Now, the other point to notice is that the correlation between silver and gold is not perfectly linear, i.e. there are long leads or lags in the performance of one metal against the other. And typically, silver tends to lag the performance of gold. And we saw that again during the course of 2019, when silver had this very, very dramatic catch-up with gold, particularly after the pandemic, when it far exceeded, before the pandemic, if you recall, we saw the gold-silver price ratio at 120 times, a new all-time high, and now it's reverted back to 80. Over the very long term, this ratio has gone down to as little as 40 times. So there is still potential for silver to massively outperform gold, obviously in a bullish and constructive environment.
Generated by its precious metal value and, as you said, the industrial part as well. Let me just quickly return to the point you mentioned about the economy, if I can, because we've seen recently, as you mentioned, concerns about growth. The IMF have just notched down their growth expectations and so forth. Inflation is ticking up, and I think recently we've had this debate about whether inflation is entrenched or not. And I know you're not an economist, so I'm not necessarily going to ask you specifically about that. But clearly there is an important thing to be monitoring here. But central banks are onto this, aren't they? And they're not going to let inflation get out of control. They are going to start raising interest rates. And let's face it, they're only raising interest rates back to what we would normally call the normal bottom end of the normal range of interest rates that you and I would know from years of old. A lot of the new generation, of course, don't know what raising interest rates is like. Of course, a lot of new people in the market, but surely central banks won't let the situation get out of control to the point at which inflation becomes a dominant feature for gold or silver. So, do we seriously think that gold or silver has really got that much more upside to go, based on the fact that inflation is going to be a problem?
Well, unfortunately, Jeremy, I think it is not entirely in the central bankers' control at the moment, because the indebtedness and the deficits are so massive in the government sector, the public sector, that even a small raise of interest rates could cripple a government budget completely. So they have, unfortunately, their hands tied, and the only thing they can meaningfully do is fight it with rhetoric and sort of intentions. So at the moment they are making some noises and state their intentions to raise interest rates perhaps next year or the year after. But realistically, how well positioned are they to do this is a really grey area, and a question that no one can answer. In my view, inflation at the moment is running very hot because of the remobilization of the economy, because of the breakdown of logistical networks, difficult to transport goods, etc., as well as industry remobilizing and trying to pass some of the damages it endured during the lockdowns to the consumers through the product price increases. But I believe that this is likely a situation that will persist for at least a couple of years out into the future, and therefore inflation will be running hot, and central bankers will not be able to raise interest rates enough to curb it.
Before we get on to your stock picks in this sector, just to quickly talk about your fund, the Junior Gold Fund, as of course it is at the moment, but you are going through this transition to bring in silver into the name, aren't you? But miners particularly, what is the strategy that you've got? Is it changing very much in the name change?
No, the strategy is not changing at all, Jeremy. It just reflects an increased allocation we have consciously made to silver miners over the last year and a half. because we recognize the potential of silver to outperform gold, not only as a safe haven asset, but also as an industrially useful metal. And therefore, we increased the allocation to silver miners to a target of 40% from a historical of 20%. So the mix of the portfolio has changed significantly over the last year and a half. And the name change is purely there made to signify and sort of explain the rationale and the strategy of the fund better to potential investors, so that there is no confusion about what people are buying.
Before we went to air, I asked you for a couple of stock picks. Let's just quickly take a look at those. What have you brought with you today?
Well, one of our largest positions at the moment, it has been for a while, is Condor Gold, which is listed on the UK market. And I wanted to raise it now as a potential outperformer because of the catalyst that could be coming through in the next 6 to 9 months. Its project is called La India. It's operating in Nicaragua. And it's fully permitted, and they are starting now to move into the construction of the plant towards production. They have yet to raise some significant capital for the construction, but they have already acquired a mill, which is currently being shipped and installed to Nicaragua. And the total capital expenditure budget is going to be about $100 million or so. And if that is financed early in the new year, they could be in production end of the year or beginning of 2023. Now, they target production of 100,000 ounces per year as an initial run rate. At the current prices of gold, they will repay the capital expenditure in just over a year. So it's an incredibly attractive economically project. They estimate the average all-in cost, marginal cost of production to be about $900 an ounce. So they are making nearly $1,000 at current prices, and therefore the plant and infrastructure development will be paid off very quickly. And from there, it's pure cash generation. And in addition to that, they continue to explore and add to the resources, which means that in years after that, they could increase production significantly.
It's interesting, actually, you mentioned the thing about raising money. This is always a problem, isn't it, for small cap companies? It was where to find the resources to get that money on board. And of course, it costs a lot of money sometimes. It's clear from what you just said that there's the potential to be a very profitable deal for some bank to lend them money. But 100 million is actually quite a lot. Do we know yet how the board is going to manage this?
Well, I think the supply of capital to that type of project is, very, very plentiful at the moment, because bankers and financiers realize the operating margins that can be had from these projects, and therefore financing is usually very easy to attract, and then it's a matter of raising some additional equity to satisfy the sort of debt-to-equity ratios that the board would wish to secure in order to have a prudent balance sheet.
Yeah. Just quickly go back to the share price chart, if I can. Is that the reason, do you think, why we've seen this softening in share price? Is there a nervousness around this? Will the air be cleared once the chief executive's board gets the money on the balance sheet, on the books?
Yes, I think that is certainly a concern, that investors have been weighing a potential equity raise to fill the project financing package, but it's also a function of the weakness in the gold mining shares for the last year or so. Investors seem to have steered away from gold and kept sort of mining companies on the sideline until there is better clarity about the direction of precious metals and what's happening to the margins of these companies.
Okay. Next pick.
The next pick is a silver producing company called Aurcana Silver. Again, we have been investors in Aurcana for several years now, and we know them well. They have been focusing on recommissioning a past producing mine in Colorado called the Revenue Virginius mine, and they are almost there at the moment. They have raised the capital, the plant is commissioned and mobilized, and they are on the way to entering production phase in the next few months. What is important about recommissioning a brownfield site, i.e. a past producing mine, is that the capital expenditure requirement is much less. it cost them roughly about $35 million or so to bring this mine into production. Therefore, the marginal profitability or the marginal economic benefit is significantly superior to a newly established mining operation, because a lot of the legacy costs have been sunk in, have been written off basically by previous operators.
So obviously, if silver prices outperform gold as well, it's another reason to look at this, isn't it?
That's it.
But I just wanted to get your views, if we go back to the share price, if we can, because this chart doesn't really show the whole picture, does it? Because if you go further back than this chart does, I think it shows the stock price a lot lower.
Yes.
So it is only, it's not that it is at a record low, it is actually just at a point at which it represents a low point. What do you see to the upside on this? Because, I mean, if what does come to pass that you've been suggesting, it's outperformance for silver, what are your expectations in where this goes?
Well, again, I don't like to put price targets as such, but it is useful for potential investors to look at the share price development over the last 2 or 3 years, because the company has been working towards bringing this asset back to production for at least 3 years now.
Right.
So we are reaching now the phase where the market is has discounted all the news of production coming in, i.e. the share price has re-rated over the last couple of years, and is now waiting to see whether they will bring this project into production profitably and efficiently. And once that happens, i.e. when the first production rates start coming in and the company demonstrates it's generating cash, then people will start looking at the shares again much more carefully. Another catalyst that could be forthcoming for this particular company is that they have another mine in Texas called the Shafter mine, which is now being studied for...
That's silver as well, isn't it?
That's silver again, and it's again a past producer, fully permitted mine, which with a reasonable, manageable capital expenditure plan to bring it back to production. So, but it still needs some studying and still needs some preparation work. So it's probably at least 1.5 years to 2 years before coming to production. But it's another potential catalyst that investors might see once that study comes closer to the decision to bring back to production, that could re-rate the share prices again.
Okay, we'll leave it there, but thanks for your time. Again, Angelos, it's good to talk to you here in the studio. It's Angelos Damaskos. He's the fund manager of the Junior Gold Fund. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.